Hello, welcome back to Mining Network. I'm joined today by Joe Battershill, the CEO of Anglesey Mining. Joe, welcome to the programme.
Thank you. Thanks for having me.
I just want to start thinking, obviously you've been in the industry for quite a while now.
Making me sound old.
No, not at all. But when I have, obviously you've had quite a bit of exposure on the broking side. You've had a lot of exposure with public companies, working for them and doing really good work. I mean, everyone, without trying to blow smoke up your ass, but when I do speak to people in the industry about you, it's always very, very good. And you must have had a lot of options available to you. Why did you decide to take on Anglesey as your first MD role in mining?
No, that's a very fair question. I'd been familiar and I'd followed the Parys Mountain story for a number of years. In fact, part of the history and part of the reason there's not been much work done since sort of 2008 is that there was an approach made by some Australians to come and buy the project off of Anglesey Mining, and by pure coincidence they were a group of guys I used to work with at Western Mining. We had quite a long history together, and I saw what they were doing, and so I took even more of a note on the project, and to be honest with you, I just think there's an opportunity. To see the project develop. I mean, it is the largest deposit of copper, zinc, lead, silver, maybe not gold, but in the UK, and it's been there for a long time. It's been through several different cycles, and it was always primarily seen as a zinc project. And zinc stinks. That's always been the view of the street for decades. Yeah. However, we're now in an environment where we're spending more time looking at the copper angle of it. There is we have a 17 million ton resource there, which is open along strike and at depth. So, I mean, I think that's going to get bigger. And there is a large component of copper there. So I think the ability to look at it now as not just as a zinc or lead zinc precious metals mine. I mean, there is in our PEA from 2021, you're looking at over 40% of the EBITDA comes from copper. Okay. So copper's become a relatively new development within a project, even though everyone's known the copper's been there. It's only really more recently the copper's sort of come to the fore as part of the development plan. So I look at that and I think there's, I've always looked at that and thought that, there's got to be the right time in the right cycle to see this developed. And it's sort of fallen off people's radar because it's not the world's largest project. It's not the world's most high-grade project. But there's a lot of aspects to it that will see it get developed. And I think in the modern environment, it's almost harder to permit an operation than it is to discover a new one. Yeah. No disrespect to any geologists. Yeah. I'm a geologist myself originally, but you can find the best project in the world. But if it's in the wrong jurisdiction, you're not going to get it permitted. And one of the advantages I always saw with Anglesey and with Parys Mountain is that the company, it's not fully permitted, but there are a number of existing planning permissions that are still usable. And one of them is we've got planning permission to effectively build a process plant. We've got planning permission to effectively build a tailings facility. We've got planning permission to do the decline and the underground development. Now, we don't have a permit to do that. Well, we could build all that if we had the money, but we don't have the permit to then start it. Yeah. So, we're now going through that process. And I see my sort of view from 40,000 feet before I joined was that all the bits of the puzzle are there. It's massively infrastructure-rich area. And that's what most miners are desperate to find: infrastructure or get infrastructure or build infrastructure. So the PEA showed a capital pre-production capex of $100 million. If we were trying to build this mine in the middle of Western Australia or in a country in West Africa or anywhere, or not anywhere, but in a lot of sort of common mining jurisdictions, capex would probably be double. Yeah. We've got a road 50 yards from the mine. We're 20 miles away from the port of Holyhead, which has got lots of spare capacity. We've got power to site already. There's already a shaft 300 meters deep. There's a kilometre of underground development. I mean, it's got so much going for it. It's had we've got a PEA on the project, and I get asked a lot about, what are the stages you're taking that PEA through to a pre-feasibility study, then a feasibility study. Well, look, I mean, at the moment we're kind of working up different aspects of it to bring everything up to the same level, because there are very few projects in the world that come to pre-development that already have, or going into a study phase that already have 4,000 ton bulk sample put through a pilot plant, or the level of geotech information we know, or have the shaft already in. So certain elements of the PEA are already bankable, and we're just bringing everything up to that level. But we've not formally announced that we're doing a bankable feasibility study. But at the moment on site, we've got Knight Peacehold, one of the world's leading geotech consulting groups. They're doing the initial tailings or initial design work, engineering design work for the tailings management facility. They're also doing fine tuning the underground geotech model. All of this is just trying to get everything, bring everything up to the same level, and then we can embark on putting this through a process to go to a financial investment decision. So I see it as very process driven.
Yeah. Okay. So essentially, you've got all the pieces ready.
Yeah, I think so.
I think someone like yourself can now come in. You've got more copper exposure than people have initially thought about as well. So there's more upside there, and you can basically come in and put it all together, and hopefully within a decent time frame, potentially get this thing into production, right?
Yeah.
So what's the timeline looking like at the moment? Because you've done the first drilling in I think around 11 years, right, on this project.
Yeah.
And the assays came out last month, and that was mainly an infill program to basically get the reserves up, right? So I assume when you do the next study, you've got all your reserve numbers and you can just crack on. But
sorry, yeah.
But tell us a little bit about that, if you don't mind. Yeah.
So when you look at the resource, the ore body is really two separate areas. There's this one zone near the shaft, which is what we call white rock and engine zone, and that's classic sort of VMS, high grade lead, zinc, silver, traces of gold and sniffs of copper. And then you move into this northern copper zone area, just to the east. And there's a structure between the two. So on a plan, they do look very separate, and they are. And I think our view is that the northern copper zone area is the stockwork that would have provided the fluids for these black smokers, that is the engine zone and white rock. So just by nature of the mine plan, the first 6 to 7 years mining is all in white rock and engine zone. Okay. And then we mine down, we decline down, then we go across and then incline back up into northern copper zone. Now there's an opportunity to actually have two declines going down and bring the copper in earlier, which is one of the things we're looking at. But fundamentally, again, trying to bring everything up to the same level with the white rock and engine zone. We had about just under 80% of that resource was indicated. So this infill drilling was really just to try and target that 20% that's in inferred. And the reason it was in inferred because it is slightly lower grade. It's around the periphery. So we drilled a 10-hole program. 2 of the holes we missed because we went past the edge of the ore body, but the other 8 are all in the ore body. The grades have come back. I'm very, very, very pleased and very encouraged with the grades. It really confirmed the original wireframe. So that, in a sense, gave me some comfort. They certainly weren't director specials. We didn't go, right, we're drilling the first holes here for 12 years. Let's find the best part of the ore body and put some holes in. It wasn't about that. It was about, okay, well, let's drill some holes and let's get some useful information out of this. And so we've done that. It's taken a little bit longer than we thought, but we're in the middle of a mining boom, right? So things do take longer, and we've now had 8 of the holes returned. We're waiting on 2, and these 2 holes, the reason they've been delayed or deferred was because we want to get those logged geotechnically before we sampled them. So that's all been done by Knight Peacehold. Now that'll feed into the underground geotech domain model and the optimization, and hopefully, or not hopefully, at some point in the future. Or in the next sort of 2 to 3 months, we should get those results back for these last 2 holes in the next month. Turnaround time in the labs we use is about 28 days at the moment. So hopefully we can get those into the lab by the end of the week. And then that information will come back, and we will then use those core holes to send off a MET sample to do some confirmatory pre-concentration studies, whether it's DMS or whether it's XRT. So again, it's all about just bringing everything up to the same level. And so we can then, really crack on with the study.
And how, obviously, this is all Parys Mountain, and you've got exposure to everything, but sticking on Parys Mountain before we move on to the others, what does the timeline look like for this in terms of working on a next study, or even?
Look, I know people do ask me this, and I always say my standard response is I hate giving a timeline.
Yeah.
Not because I don't want to be held accountable, but we're going into a we've started a permitting process.
Okay.
And I think, having been in the mining industry for so long and as an analyst for a long time with on the investment banking side, you tend to find that most people disappoint on the timings when they're going through a permitting study or permitting phase. So, we've engaged with the North Wales Waste and Planning Authority. We're quite advanced in our discussions with those, and everyone's being very supportive. But there's a process. Yeah, we have a process. We've got a lot of baseline data, which we've had a gap analysis done by our consultants on we're using RML up there on that. So we know where the gaps are. There's nothing major, but it's still a time. We have to get a complete season of like bird nesting studies, and it's all again. I use this phrase a lot to people. Is we're going through. There's a process we have to go through. Yeah. We can't just go, okay, we've got all this information, right? Let's start the mine. We've got to get this to a point where all the information. We're going to need $100 million to build this. I've got to be able to put documents in front of people, banks and brokers and investment bankers, whatever, and say, well, here's all the information, so they can do due diligence and say yes. You've got to do things the right way, otherwise you don't get these things.
No, I completely agree. But say, for example, if you were to bypass the pre-fees or whatever and go for the feasibility,
okay, well,
what sort of timeline might that?
All right, so I work on a time frame of I think internally I think the permitting process could take 12 to 15 months, and I throw that out there loosely because you never know what comes.
No permitting.
Something might speed it up. Something might slow it down. We're in the laps of the gods to a certain degree there. If we had the permitting, all done today, the first ore is 60 meters below surface, so you'd be in that pretty quickly.
Yep.
You could be mining ore within 3 months. To build whether it's we've done 3 scenarios on the plant size, whether it's 500,000 tons or whether it's 1 million tons. Let's say it's in the middle. I mean, let's pick a number and say it's in the middle. How long does it take to build a 3/4 of a million tons a year mill? Well, it's probably sort of 12-month build time, maybe longer at the moment. So I think from commencing construction and development through to first product, it would be 12 to 15 months. Yeah. So it's not I look at it, again. The other thing that got me interested in this is that everything's kind of bite-sized. It's of a scale that is never going to appeal to a BHP or a Rio, and I always look at Central Asia Metals, and they're sort of they're my poster child as a company, because they've demonstrated very, very well and very successfully to the market that you don't have to have a big project to make good money and generate good returns for investors, and whether that's through generating additional money to generate growth or to pay dividends. And I think Central Asia Metals that's the model we want to follow. It's good. Parys Mountain would be 14 to 16,000 tons of copper equivalent a year, but with at the moment we can see a 12-year life, and based on the exploration upside, it's probably more. So you've got that longevity. It's never going to be a big mine. It's never going to push out 50, 60,000, 70,000 tons of metal, but it will make good money.
Let's talk about the money.
Yep.
What sort of money are we looking at in terms of you spoke about a PEA last year?
Yeah.
What are the economics looking like on there for the project?
Well, look, interestingly, what really sort of enthuses me about this is that the study that was done using the trailing 3-year average commodity prices at the time, which was $2.80 copper, $1.25 zinc, $16 silver, and that on $100 million of capital, that generated $120 million of NPV. So you kind of look at that and kind of go, well, a lot of people look at the NPV to capex ratio, and it's about 1 to 1.
Yeah.
So people don't get too excited about that. But then you put in, at the end of the financial year, so if we use the March 31st prices, which were $4.20 copper, and admittedly zinc was $1.70 or $1.80 a pound, whatever. But you put those numbers through, and the NPV that dropped out, and just by changing the commodity prices, not changing the costing or anything like that, but they're probably which you'd have to adjust. But the NPV was jumps 3.5 times. So you end up with a $360, $370 million NPV, and under those conditions, even if it was somewhere in the middle of those pricing, which, in my own head, I use whenever I'm looking at these projects, or whenever if we're looking at other projects, I automatically think of, well, what does it look like, $3.50 copper?
Yeah.
Because, some people might think that's aggressive. Others will think it's
No,
kind of normal.
So, because I think we've seen a dip in copper recently, and it's sort of fallen to around that mark, right? I can't.
It seems to have felt like there's a bit of a flaw around that, and I mean, who knows what happens?
Yeah.
I mean, I very much have a view that the inflation we see in metal prices, a lot of that gets reflected in the cost base of mining companies as well. And when you get a reset, when the metal prices fall, generally costs fall. There's usually a lag, but generally the costs fall with it. So I always look at maintaining it. What is the long-term margin as opposed to what's the metal price? What are the costings? What's that long-term margin look like? And an under sort of $3.50 copper, and similar sort of relative prices for the other metals. Parys Mountain will throw off $30 million a year of free cash over the life of the mine. So it becomes an interesting project for people, and that's what I see in it. I kind of look at it and go, well, it's nice to have something that just sits there and will just churn out cash year after year after year. And what you decide to do with that, whether you grow the business or pay it back, you have options. Yeah. And and you're not betting the farm, because it's not a $300 million development decision. It's 100.
Yeah.
So I mean, I look at that and kind of go, well, that's very manageable and very bite-sized.
Yeah. Okay, and the other side as well, because I do want to touch on it. You own 20% of an iron ore project in
Grängesberg, yes,
Grängesberg in Sweden. You've just released a PFS on that last month, I believe.
Yeah. That's right.
Run us through those numbers, because they look pretty impressive.
Well, I mean, I've always called this bit of a sleeping giant or a hidden gem within the Anglesey structure, and again, I think my predecessors have done some amazing work to bring it into the stable, and it probably hasn't been given the airtime that it should have been. So I've been trying to change that, and very much with the support of the board. Yes, we own 20%. I mean, it's a long story. I mean, the Grängesberg iron ore project was at one point the third largest mine in Sweden. It was operating for close to 100 years. It closed in 1989 after producing 180 million tons of iron ore, very high grade, between 68 and 70%. It produces a 68% pellet and a 70% concentrate grade, so it's very high quality. It closed in 1989 because the iron ore price was $27 a ton. State owned, so when the state closed it, they closed it. They took ownership of all the buildings, and they've maintained all the buildings. I mean, you go to site and there's still a lot to see. Everything's still there. We have an option to use some of those buildings should we require it. But importantly, in a way, it's a bigger version of Parys Mountain, because it's a brownfields development or brownfields restart with lots of infrastructure. But you've got power on site. You've got the railhead still there. You've got an ice for a 12-month year ice-free port 280 k's down the road on the rail. So again, you've kind of got everything there. However, it's been shut for best part of 30 years, right? So there's a lot of work to do. The mine's flooded, and there are some aspects with respect to the mining that needs to be sort of fine-tuned. So. And that was the whole point of doing this PFS. So this was a PFS update. So the original PFS was done in 2012, and that's a very extensive document. And again, making sort of similes to Parys Mountain, you've got this position where you've got a PFS on a project where a large amount of the work that's gone into that PFS is really BFS standard work. I mean, a project that's already produced 180 million tons. Do you really need to do more than met test work? So everything within the metallurgical side is probably closer to a bankable study than it is there are some fine-tuning elements you can do. Actually, when I think about it, there's been quite a lot of progress in flotation of magnetite ores and stuff like that. So there is some work, quite clever work we could do there. But fundamentally, the update was really just to reprice everything, bring everything up to date in terms of costings. So that's been done by Micon. They've done a great job, but the results have dropped out. I mean, I think they're for a company the size of Anglesey are astounding. I mean, it's we only, and I think the perception is in the market we only own 20% of this. So you've got a project that's 20% that we own 20% of. We have a right of first refusal on another 50, so we can get to 70, and we can do that relatively quickly if we wanted to, and that is very much in our plans to do that over the coming months. And then there's our partner at the private company level, which is Grängesberg Iron or GIAB is what we refer to it. And so we'll be having discussions with the minority about their stake as well. I think once we can demonstrate that we can consolidate it, then the market will probably have to pay a bit more attention to it, because it's probably one of the largest undeveloped iron ore or development opportunities in the iron ore space, and we really don't want to sort of benefit from other people's misfortune. But I was on site with the consultants on the day that Russia invaded Ukraine, and I think projects like Grängesberg have suddenly become very strategic in the eyes of European steel mills or steel mills in the Middle East. I mean, this product is perfect for DRI. It's green steel.
Well, it's high grade,
this makes green
Yeah.
steel. Or this makes steel greener, should I say? And I think from that regard, we'll see a lot of interest in it from with respect to potential offtakes and partners. So the reason we did the PFS was really, or the update was, with that consolidation aspect in mind. I thought it was very important that the board had up-to-date numbers to be able to make the decision to go ahead or not go ahead with the consolidation. And I think the numbers we've seen, for $400 million of capital, generates a post-tax NPV of almost $700 million, with operating costs FOB to Oxellösund of just over $50 a ton. That becomes quite competitive.
Yeah.
And
I think also the product sells at a premium because of its grade as well, right?
But that's factored into the NPV.
Yeah.
But you're right. I mean, it's a premium product. It's a premium product, and it'll do between 2.3 and 2.5 million tons a year of this with a 16-year mine life, and it's open at depth. So it becomes one of these projects that I think once it's developed will actually be around for quite some time.
What's the? I know again we're sort of similar to Parys Mountain, but what's the pathway to get there? You were talking about you need to dewater part of it.
I was just on the track of that. So with the, the reason we did the PFS was to give the board the information to make the right decision on whether we go ahead or whether we, consolidate or not. Mm-hmm. But also it's given us a set of recommendations as to what we need to do to get it to the next stage. And my view and the board's view is the next stages of that are relatively straightforward. There's a little bit of work to do in fine tuning the resource model. There's a little bit of work to do on the reserve in terms of there's a fault that goes through the ore body. It's like a 45-degree fault, and where it cuts the ore body, we probably just need to change the mining method around there. Do a paste fill, gives it a bit of a dynamic. Helps if there's any movement on the fault. It almost becomes a shock absorber for that. So we'll fine tune areas like that. But I think once we've done that, which that's probably 3 to 6 months' work once we commission it, then it steps straight into a bankable feasibility. So in fact, the consultants are saying you should probably start the baseline studies now. So look, we're very encouraged by it.
Okay, so both of these projects are fairly advanced now, aren't they? Realistically, so
they're probably more advanced than the market thinks they are. Yeah, that's correct. Yeah.
Okay. What do people need to have a look out for? Obviously, you're talking about a few different milestones going on. There's a lot of work going on at the moment. What should we be looking out for the rest of this year or maybe into next year?
Look, I think it's very much about the work programs at Parys Mountain. We've still got a couple of holes of assays to be returned. That will feed into the metallurgical test work program. So just keep an eye out for that. The initial design work on the tailings, because I'm going to be impressing on people a lot more that this is now a permitting process. Yeah. And one of the biggest hurdles to a permit is your tailings management facility. Yeah. So this work that Knight Piésold are doing at the moment to me is it's not critical path, but it's critical in terms of the design and how people view this. I've had brokers in London who have obviously been to site as tourists, driven around it and walked around it, and we own it and we maintain it as a heritage trail, and there's pathways all around the old open pit workings from 300 years ago. Where we're working is nowhere near that. We're sort of off to the north and underground, 500 meters underground, so no one will see us. But I've had plenty of brokers tell me you're never going to get that permitted. And so I think we will. And so I think the arbitrage here is that, keep an eye on the the announcements that pertain to, all the work programs we're doing, the baseline studies, the tailings management, the water studies, because that's all building to, this key permitting aspect. And I wouldn't be doing this if I didn't think we could get there. Yeah. We'd like to do some more drilling. Fundamentally, I don't think we need to do any more drilling on the White Rock and Engine zones. I think we're pretty confident that what's there is there. The Northern Copper Zone, which is all inferred. I mean, I'm not going to lie. If I had $2 million or £2 million in the bank now, I'd put 2 rigs on there and I'd leave them there.
Yeah,
because that's an enormous opportunity that people just don't appreciate, because it's never really been pushed as what takes this to the next level. At Grängesberg, look, I mean, we would love to consolidate it. So, those sort of actions can take time, but we'd like to do that. And obviously, we'd like to be pushing it into the feasibility stage. So, we'll be looking at commissioning the work on the resource and the reserve as soon as we can.
Awesome. So it sounds like progress into permits on Parys Mountain, consolidate, increase your position 70%.
Yep, ideally, yep.
Iron ore, and then you've also just very briefly, you've got around a 12% holding in another company, which
so Labrador Iron Mine Holdings. I mean that's a of all the assets within the company, and when we're just a shareholder in that. I have nothing to do with the management of that business. I mean, my chairman is the executive chairman of Labrador, so he's obviously intimately involved in running that process. But of all the assets within the stable, that their asset is probably the closest to cash flow. I mean, they've just announced a capital raising for $4 million, which really triggers the next round of work on the Houston project in the Labrador Trough. And interestingly, I mean, we're speaking to a lot of iron ore traders. We're speaking to a lot of iron ore, parties interested in the iron ore space. And a lot of the feedback we get is that post-Ukraine, Russia issues, the two sort of areas of interest for most people are the Labrador Trough and places like Sweden because of grade. You've got the Pilbara is generally in great decline, massive volumes, but generally great decline. And for most steel producers, one of the largest components of CO2 is the freight, is getting iron ore to the mill. So Labrador, high grade product, Grängesberg, high grade product, and probably in a great better location. But the work at the progress at Houston is now they've got the money, they can go ahead, and I think that's from starting to from commencing construction there to first production would be sort of 12 to 15 months. And I think it's important for people to remember that the last time Labrador got into production, it almost got to a market cap of, I think it was about $900 million. And at that point we owned 45% of it. So we don't own that now, but it's an opportunity. Look, I look at it and I see it as it's almost like a free option on a whole other iron ore project and province. It gives us that diversification, and best of luck to the guys at Labrador, because they get that thing into production. We're going to benefit massively. So
of course,
it's a great position to be in. And what's it worth? Looking mark to market of the shares are probably worth £2 million, but we tend not to view it that way. We tend to view it more as a strategic holding. Yeah.
Well, I think that's good, but obviously £2 million of overall market cap at the moment of around 6-7 million, right?
I think 7. I think we're down to about 7.5.
7.5. I mean, so
annoyingly frustrating, but what do you do? I mean, we're in bad markets, and it's the summer in the UK.
To me, it's true. But it's crazy to me how you've already got that value to 2 or 3 million from just your passive investment, and there's just hardly anything being attributed to the other two assets that you.
I tend to agree.
Yeah,
I tend to agree.
But there's a load of good milestones coming up, so we'll keep on top of it. And good to see you, Joe.
Thank you. Thanks for having me.